assistance is run by a bunch of investment bankers, and Morningstar's tools can help make
Hi, my name is Eric Kobayashi Solomon, co-editor of Morningstar's Option Investor. Just recently, I did a video with Matt Kofina and Damian Conover discussing healthcare reform in the United States and how that would affect big pharma and also managed care. Today, it's my great pleasure to welcome Julie Stralow to talk about how healthcare reform will affect device companies. Julie, thanks for coming.
No problem. Good to be here.
And first, before we discuss healthcare reform, I've just got to take a victory lap.
Okay.
Thanks to you, we decided to buy Stryker call options on Stryker that were struck at $45 a share. Stryker is trading for $57 a share today. We are far in the money. Our investors have made a lot of money. Thank you very much. Great work.
You're welcome. Congratulations. It was your strategy, so.
Well, and it was your brains.
All right. Well, hope everybody invested.
Me too. So let's turn for a second to the healthcare reform. We talked to Damian about big pharma. Damian thought that big pharma was kind of even Steven. Mm-hmm. You know, there are some benefits, also some drawbacks. Yeah. Matt was saying kind of the same thing for managed care, maybe more on the downside. Mm-hmm. What about devices? How do you see healthcare reform affecting the device market and Stryker in particular?
Well, in general, we have a relatively neutral stance on the reform package with a negative glancing on it. Mm-hmm. And that is because of the device tax that was introduced. And we think that that is going to induce some margin compression at some of these companies unless they can introduce some cost controls.
I see.
So basically, they're fighting to get the margins that they've had in the past.
I see.
In the
Have
future.
Kind of a bit of a headwind.
Exactly.
But I think the tax doesn't pick up immediately, right? Isn't there some lag time?
Correct. So it will be introduced in 2013. So you have to think that they are going to plan accordingly and try to control their costs. If they're growing, which a lot of our device companies are, they should be able to become more efficient. There's a couple places we think maybe in manufacturing and SG&A, they could try to control those costs a little bit better. And
SG&A being sales, general, and
correct,
administrative
marketing and general
right,
and
okay.
administration. So those are some areas, some places where they could pull some levers and possibly not take a hit off that device tax. And we had been estimating that could take about 5 to 10% off of most of our established device firms' long-term earnings power is that device tax. But if they can control some of those costs, we think that that'll largely be eliminated in the long run.
And it seems likely that they will be able to kind of, okay, yes, the government's taking more, but then they're figuring out how to be more efficient at the same time.
Absolutely. I mean, these companies, the reasons they have to adjust to changing environments. So this is just another change that they're going to have to adjust to.
Yeah, that makes a lot of sense. Mm-hmm. Now, one other thing that I want to ask you about, we're so far in the money now, we've made a lot of money on this. Mm-hmm. If you're seeing this kind of headwind, is now time to take profits on the Stryker position, or are there any kind of timing factors that we should be thinking about right now?
Well, I think that actually you should hold firm for a little bit. There could be some upside in the next several quarters. As you know, Stryker does have a major implant business, but also has a capital equipment business as well.
This is the hospital equipment stuff, beds.
Correct. Operating room equipment, surgical tools, all sorts of things that take a big capital investment for hospitals to make. And Stryker has really been getting hurt over the past year. And we think this quarter is actually going to have a really, really easy comparable, and momentum might return to that business again.
I see.
And if momentum returns, investors might begin to appreciate the name a little bit more.
Start to realize what's happening.
Exactly. So there could be some upside.
So when you say they were being hurt, basically just the hospitals are cutting back on spending and weren't spending as much for new hospital equipment and so forth.
Yeah, definitely.
Right?
Lots of delays and even some inventory reductions and things of that nature. Hospitals were really battering down the hatches last year. So
you think we'll even see some bounce back a little bit if they've delayed?
We don't have a huge bounce back. We're more looking from a sequential basis. We're more looking for things just to get better and bounce back from the lows of last year at this point. But that momentum can build, and if people get back into the name just on that alone, there could be a little bit more upside in the Stryker shares.
Sounds great to me.
Yeah.
Julie, thanks for coming.
Thanks for having me. Appreciate it.
And thank you for joining us. Please stop by the Option Investor website, where you'll find many more great option ideas based on Morningstar's fundamental research.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.